Lilladher joining us right now with his views as well. Dilip, good day to have you. The market, the last two sessions, has really been celebrating almost in a way the 100-day completion of the government in office. What's the view that you're taking right now about the near term and the kind of upside the market could show closing out September?
Well, I think the 100 days also has coincided with a very surprisingly good news, and that is a 5.7% GDP growth in the first quarter. So, all of us in the market, I'm sure we are all doing that, and everywhere else would be doing the same thing. They would be extrapolating that without any push from the new government, the economy is already on a revival path. So if this new government were to take this particular economy to its logical conclusion on the upside, then what could be the growth rate? I think that is what is now primarily driving the optimism. That is what is primarily driving the confidence in the investors to put in money even at the current levels. And I think this is also giving the confidence that perhaps any correction whatsoever that may happen will probably remain shallow unless and until a big international event really disrupts the whole thing. But otherwise, this market, as what it has been for the last 3 months, will remain a market to buy on dips and keep on acquiring.
Just Dial is on a tear. It's been a heck of a performing stock. It's been a volatile stock, but today it is moving up on 500,000 shares. 500,000 shares for a stock which has a trading price of 1700 plus. That means there is definitely some element of institutional buying. That entire e-commerce space or quasi e-commerce companies are in demand, especially ahead of that Alibaba IPO. Dilip, whereas the world is concentrating on the economic recovery and when cyclical recovery for Indian economy will come back. But if I look at the basic groups which are outperforming, it is still IT and pharma. And IT and pharma sectors have nothing to do with Indian economy.
Sure, Nikunj. I think what probably you're seeing is the rotation in the sectors, which is what is happening. So if the index is already moved up from, say, around May of 7,000 Nifty to around 8,000 right now, I think a lot of stocks and sectors have really rotated. And the last leg, just before this news about the GDP, when things were looking a little more tentative in terms of the recovery cycle, or maybe the Supreme Court announcements, which in turn was putting a lot of question mark on a lot of things on the policy decisions. So I think all those things probably were leading to people really taking shelter behind the defensives, which is where the IT and the pharmaceuticals come in. But if one were to take a broader call from here on, I think it would still be that these two sectors would continue to provide the shield, the resilience, and maybe it will be a part of the portfolio. But I think the broader money probably will still chase the other sectors, the banking sectors, the construction, capital goods, and maybe a few of the mid caps also.
All right, Dilip, you stay on with us. Let's just get in ideas at 255 on a day when the market is just, sitting at record levels and is promising more momentum. Ashwini, come to you. What is it that you'd recommend at this hour?
Well, I think you can get into Kotak Mahindra Bank with a stop at around 1040 and look for targets of 1085. It's been a strong bank, so just correcting sideways and then making fresh highs for the day. So Kotak is the call.
Mitesh, what about you?
I would suggest a buy on ACC. It's just giving that breakout above 1550. So that's a buy. Keep your stop loss below 1530 and look at targets of around 1615 to about 1620 on the upside.
Okay, let's take a break with the news that there is one more large block deal in Idea. That stock's going berserk. 2 large block deals, nearly 70 lakh shares in a matter of just 20 minutes. So the appetite to buy into telecom clearly seems to be making a comeback, and the turning point has been Q1 numbers. Ever since Q1 numbers have come out, both Bharti and Idea have turned it up very, very smartly. Let's take a break. When we come back, we'll capture the last 30 minutes of trade.
Welcome to Smart Investing. Smart Investing is beating inflation through ETFs. Smart Investing is investing in some of India's best public sector companies through ETFs. ETF. Enjoy the future. National Stock Exchange.
एक्सक्यूज मी, आपको क्या लगता है पेट्रोल कार इज बेटर या डीजल?
सर बोलेंगे मसाला डोसा खारा बात वांगी बात मिसल पाव उत्सल पाव मेंदू वड़ा।
कार का ईएमआई कितने साल का लूं?
आपको तो 10 साल लगेगा।
डॉक्टर साहब, नई एसयूवी कितने में आएगी?
2 लाख में। मेरी ले लो, इट्स न्यू।
साहब, छोटी गाड़ी में एयरबैग्स होंगे क्या?
जब कार खरीदनी हो तो दुनिया भर के लोगों से मत पूछो, जस्ट आस्क द एक्सपर्ट्स। carwale.com।
1.3 लीटर इंजन लूं कि 1.6?
Welcome to Sensible Investing. Sensible Investing is stock market returns through ETFs. Sensible Investing is tax-free returns through ETFs. Sensible Investing is anytime liquidity through ETFs. ETF. Enjoy the future. National Stock Exchange.
Designs to desire. Hindware Italian collection.
Welcome to Value Investing. ETFs are value investing because of low portfolio churn. ETFs are value investing because of stock market returns. ETFs are value investing because of low fund charges. ETF. Enjoy the future. National Stock Exchange.
All right, welcome back. A touch and go moment with 8100 on the Nifty, but still meandering in and around 8100 there. But auto stocks are in fifth gear, pharma stocks are refusing to come down, and today's select IT stocks are also looking strong. Dilip, how should one read into auto dispatch numbers? For the moment, interest rates have not come down. Economy has not revived. Disposable income has not gone up. Yet auto dispatch numbers have been breathtaking. Why are auto numbers so breathtaking?
Well, I think, Nikunj, couple of things. I think one is, of course, the base effect, that last year's base effect was certainly there. And second, I think all said and done, probably, even if it is not so very conspicuous in terms of the recovery, probably the first quarterly numbers suggest that there are green shoots, and probably it is manifesting more by way of some of the discretionary spends, and which we can see probably is getting reflected in the white goods, where once again the same equation holds, that the white goods, there is no reduction in the interest rate, but yet we are seeing the white goods being sold so well, and even in terms of the cars, certain category of cars, they are doing well. So probably it just partly explains the overall thing. Though very difficult to understand that why there should be such a enthusiasm or such a great movement. But yes, I think some of these are getting reflected in these numbers.
I have a simple follow-up question. For those who are overexcited about buying auto stocks, are they forgetting a very simple fact that auto industry currently is enjoying an extended period of excise duty cut, and that extension may not go beyond December if the sector revives? What happens then?
So what really would happen is, if you are on an uptrend, if the economy is on the uptrend, the discretionary spend is going to expand, then really speaking, Nikunj, what would happen is excise duty would then look not so very significant as the overall cost component, even if that really goes up. The main thing is the confidence which has to come back in the spending by the consumers, and which is what is more important and more dependent on the overall vibrancy of the economy. And as what we are seeing, that maybe this has simply just started at the moment. So I think that may not turn out to be so material. It would be more that how much more people are really going to spend. I think that would really matter, not the really the cost. because that also can gradually get offset in the coming time by reduction in the interest rates.
Fair enough, Dilip. I'll talk about your top ideas from the auto space, also auto ancillary space in a bit. But IRB Infra, you're looking at a price volume breakout there, snapping a 2-day fall. Good pickup in activity that's close to a 4% gain. Ashni, you want to give a quick recommendation on this stock?
See, IRB is acting fairly similar to Century, so it was consolidating. The range was narrowing for many days. Yesterday we had that downgrade also, but the stock didn't really react on the downside. So it's now getting ready for a range expansion which could take it up to 285, 290. So this is a good day to get back into IRB. Your downside is probably $7-8, but upside could be 30 to 35.
Good day to enter IRB. You're looking at the stock at 260 as we speak. Dilip, would you also go within the auto ancillary space? Would you go with the names that are much talked about, whether it's Ashok Leyland or Maruti Suzuki at this point, where there's been significant interest among auto ancillaries? Of course, Bharat Forge has been drawing a lot of institutional interest.
Sure. So I think in the auto pack, we still like Maruti without any doubt. I think M&M is another stock that we like. And third, of course, we think that Tata Motors will still has a sufficient steam to go to move ahead. And I think it probably is getting a lot of tailwind by way of its international sales. But I think the domestic recovery is not too far off. So I think it's a combination of some of those. Coming to auto ancillary, I think something like Motherson Sumi still, despite the fact it has gone up quite a bit, that is a stock which we still like. I think that's a stock which can still show a reasonably very good growth, and which can still, in spite of the growth, can show a ROE of around 28-30%, which is a phenomenal combination. So I think Motherson Sumi still remains pretty good. I think in the tire space, something like a JK Tire probably would look good from the current level, despite a high debt on the book of the company, and maybe something like a Sona Kyoto or something. I think some of these auto ancillaries are the ones which we really like. LG Balakrishnan also is another stock which we have been recommending for quite some time, and we still like that stock a lot.
Okay, I'll come back to you on some of the infrastructure names, especially a call on IRB Infra. But before that, I just need Sandeep Wagle, who joins in right now, to give his recommendations for the last 25 minutes. Sandeep, what do you have for our viewers?
Tanvir, buy in ACC stop loss 1525, target 1590. A buy in a Coromandel fertilizer stop loss 273, target 318.
Okay, that's a buy in Coromandel International with a target of 318. Dilip, I was asking you about some of the infrastructure names, especially in IRB Infra. Technically, a breakout. Fundamentally, do you like the story?
I think IRB Infra is one of the few stocks which are very well placed in terms of its liquidity position, in terms of the BOT projects which have started raking in a good amount of cash. And when I say cash, that means the actual cash flow is really improving quite a bit. So I think that itself is putting the company in a very comfortable situation in terms of the execution also, and also in terms of its readiness to take some more orders, which is not what you can say for the rest of the other infra companies. At this level, there are very few companies who can really take big orders because of their balance sheet, and I think IRB really qualifies both also in terms of the cash flow. So that's a stock which really has a reasonably good potential to give a reasonable appreciation, maybe I would say 35 to 40% over the next 1.5 years.
Dilip, which is the best private banking stock to buy? Because everything and anything is up. But on a relative basis, where do you still sense some outperformance?
I think Nikunj, Axis, ICICI, they are really, they still continue to fare very well without any doubt. But if one were to take a slightly short to medium term view, I think I would still go behind one slightly very big name, that is HDFC Bank, where I think there's a good scope for it to move, considering the fact that the way Axis Bank has moved off, the way ICICI has moved, and the way some of the, say, Yes Bank has moved. I think HDFC Bank has been pretty muted in terms of its growth, and also because of the FI limit that it is under the constraint. But having said that, I think that's a stock which can still give 15 to 20% return over next 3 to 4 months, which is quite a lot considering that it's a frontline bank. And then a slightly mid-cap private sector bank, that is Federal Bank. I think that stock has got the right combination at the moment, increasing NIMs, good credit growth, and stable asset quality. I think all these three would really help this bank to really go places. Maybe this is a stock which can give, 60-70% return over next 12 to 18 months.
% return after a 60% appreciation. Isn't that a stretch?
Well, I think that. Well, I think that's a stock, that's a bank where everything is going to expand, whether it's the NIM, whether it's the credit growth or the NII growth, and the stable asset quality is going to really help the bank quite a bit. And the management also is pretty good and sound at the top.
Aside of some of the banking names, what about the NBFCs? Anything that you like there, Dilip?
I think in the NBFC space, I think it's something like a Mahindra Finance, which looks good. Though we have not done a work on Bajaj, but I think Bajaj Finance also looks pretty good, pretty strong. I think the way they have planned their growth over the next 2 to 3 years, and the way the management has enough resources in terms of maintaining its shareholding, because they're very resourceful at the parent company. So I think all said and done, that company also, despite its run, I think considering their plans and the kind of stranglehold they have on the consumer durable space, I think this is a NBFC that can really be a part of your portfolio.
Okay, I'm just going to change the scope of conversation, Dilip, completely from cyclicals and NBFC, and let's talk about the dusty and the rusty part. And the dusty and the rusty part of this market clearly is the power space. No one likes it, no one owns them. There are a lot of policy issues. Some companies don't have coal, others don't have gas. What is the scope of the power sector? Because the power sector is an integral part of the economy.
You're quite right, Nikunj. I think the way it has had a run on the expectations, and I think now probably it is slowly turning into a laggard for the want of real clear-cut direction in terms of some of the things which you mentioned. But in Nikunj, in this particular space, there are two stocks probably which I like. One is NTPC. I think NTPC has also corrected very well. 100,000 crore, almost a market cap of the company, sitting on 18,000 crores of cash. And if, as what they have thought about, if they really take over some couple of power projects, they can add almost about 10,000 megawatts immediately. And that 18,000 crores of cash, which is earning 5-6%, will start earning 15-16%, apart from giving a decent ROE. So I think that company, and plus they also got their own coal block, which probably in next 4-5 years can turn out to be 100 to 125 million tons, which is almost 1/4 that of Coal India. So I think this company is very stable, may not give you a runaway rise, but something which you can bet on and which can give a very reasonable return over next 1.5 to 2 years. And it's a big, fairly liquid. And the second one, which probably I would still stick my neck out, probably would be Adani Power. Maybe they are putting their acts together, and some of the policy changes which are really happening, which is likely to happen, will benefit everyone, but more so Adani. So I think that's another stock. Adani Power is something which we like.
Okay, just before we let you go, just want your quick reaction on names such as Jindal Steel and Power, Hindalco, which are really weighed by the decision of the Supreme Court on the coal block allocation issue. How are you viewing these stocks? Do you have a position here?
Well, I think based on the arguments which the government lawyer has done, the Attorney General has done, it so appears that whatever hit, say broadly we were thinking that on a sustainable basis it will impact almost 3 to 4% of their PAT levels going forward. If Supreme Court really were to accept the suggestions made by the lawyer, especially for JSPL. And I think a one-time hit of around 1,500 to 1,700 crores looks very much possible based on this calculation. But more important is it has also come off from a high of 325, 330 to almost about 240 levels. So much of it is there in the price, but it has also taken a lot of sheen out of what was really expected from the government, and maybe the judiciary also has interfered in this. Not interfered, but probably they have given their judgment. So I think it has taken a lot of sheen. So maybe from the current levels, the way it has fallen, both JSPL and maybe Hindalco and Sesa Sterlite, all three of them probably would look good. But one will not say that one is really too excited, and one will still wait for the Supreme Court to give its final judgment.
Before we wrap, I want to compliment you for identifying Britannia at the right time, at the right price. Stock is at 1300. Way to go for Britannia, or is this as good as it gets for Britannia?
Well, I think now from here on, I think it's as good as it could have gone. Maybe another 10-15% on an over-exuberant side is not impossible to imagine, which is what we think is very much possible. But yes, it had a very good run-up, fortunately for us.
So you're telling your clients that one should get out of Britannia. Is that the house advice?
Well, as what I said, another 10 to 15% rise looks very much possible. And in the FMCG space, maybe, we'll have to, if at all we have to think about replacing Britannia, probably you'll have to identify some other stock which will match that particular, parameters, a 40% plus ROE, and still generating a free cash and still growing at around 20%. So it will be difficult to find that. So for the time being, I think if somebody is holding a partial booking of profit is certainly advisable, but otherwise 60-70% you can still hold on.
We'll let you go there. Thanks very much for joining us and giving us your perspective in the markets. Really appreciate your views as always. Let's get in a quick view from our research desk as well on what dealers are doing in the last 15 minutes of the session left. Darshan joins us with a quick snapshot. Darshan, what are you picking from your sources?
See, Tanveer, Great Eastern